All right, welcome. Today we are tackling a really fascinating question. Why do the numbers that define our wealth seem to have a life of their own? We're going to get into the human side of markets. Let's dive in.
You know that feeling, right? You open your phone, you look at an app, and poof, your wealth has changed. But you look around you and nothing's different. The buildings are still there, the cars are on the road. So what is moving? Well, the answer isn't really in finance textbooks. It's deep inside human psychology.
Okay, so the very first clue to solving this puzzle is a huge but simple shift in how you think about all this. We're all conditioned to see the stock market as this giant casino for money. But fundamentally, it's not about money at all. It's a system for trading something much more real: ownership.
Yeah, that's literally all a stock is. When you buy one, you're not just getting some digital blip on a screen. You're actually buying a tiny, tiny slice of a real business, a company with real people, real products, and a real place in the world. So let's break down how that actually works.
So let's imagine there's a fantastic local bakery. Everyone loves their bread. The owner wants to expand, open new shops, but they need cash. So what do? They take the entire bakery and slice it up into thousands of tiny, equal pieces. We call these shares. Now, people like you and me can buy these pieces, and just like that, you're a part owner. You get a piece of the pie, so to speak. Sounds simple, right? Well, this is where things get interesting and where the human element really kicks in.
Because here's the twist. You own a piece of that bakery, sure, but you don't get to walk in and tell the baker to make more sourdough. You have ownership, but zero control. You're basically a passenger on this big ship. You benefit if the journey goes well, but you're not steering. And this feeling, this lack of control, it forces all of our attention onto the one thing that we can see moving all the time: the price.
And this right here, this is probably one of the most important ideas in all of investing. Price and value are not the same thing. Value, that's the real fundamental worth of the business. Its buildings, its sales, its profits. But the price? That's just what someone is willing to pay for it today. It's a number driven by emotion and perception. Just think about some of those crazy meme stocks a while back. Their prices went to the moon, not because the companies suddenly became 100 times more profitable, but because a story, a collective excitement just took over. The price was pure, raw human emotion.
So you can almost think of the market as this giant machine, a conversion engine. On one side, you feed in all this messy human stuff, millions of people's hopes, their fears, their greed, their panic. And on the other side, it spits out one single, clean number: the price. And that's why a stock's price can go on a total roller coaster ride even when the actual business hasn't changed a bit.
So if the price is all about human perception, what are all these investors really voting on with their money? What are they looking at? It's definitely not just about what's happening today.
See, the market is a forward-looking machine. It's always trying to guess the future. Every single time someone buys or sells a stock, they're not just making a statement about the company today. No, they're placing a bet on what that company could become tomorrow. It's all about our collective imagination. I mean, a company can be losing money right now, but if enough people believe it's going to be the next big thing in a decade, its stock price can be through the roof.
And these collective beliefs, they tend to move in these predictable emotional waves. It all starts with a bit of optimism, right? Things are looking up. Confidence spreads, and prices start to climb. But then that optimism can boil over into pure irrational hype. That's when you get a bubble. And of course, what goes up must come down, or at least get a little shaky. Uncertainty starts to creep in, which can quickly turn into fear, and in the worst case, that fear becomes outright panic. It's a cycle, and it's driven entirely by our very human nature.
And that moment of extreme hype, that's what we call a financial bubble. It's the point where people aren't really investing in a business anymore. They're just speculating. They're buying something for a high price simply because they believe some greater fool will come along and pay an even higher price for it later. At that point, the price has completely disconnected from the actual real-world value of the company.
So when you see these wild, dramatic swings in the market, it's so important to remember. This isn't a sign that the system is broken. In fact, it's a sign the system is working exactly as it's designed. It's just processing the constantly shifting hopes and fears of millions of people. Think of it this way. Volatility isn't a bug, it's a feature. It's the very heartbeat of a market that's run by humans.
Okay, so let's bring this down to a personal level. How does this affect you and me? Well, we are hardwired to react emotionally. When prices are soaring, we feel like geniuses, right? Risk feels small, buying feels safe. But when prices start to fall, oh man, the anxiety kicks in.
Suddenly, risk feels massive, and we get this powerful urge to just sell everything and stop the pain. Our gut instincts often push us to do the exact opposite of what we should.
Now, I know what you might be thinking. This sounds kinda chaotic, right? If the market is just this giant swirl of unpredictable human emotion, how can anyone possibly succeed? And you're right, you can't control what millions of other people are going to feel or do. But you have total 100% control over something else, something way more powerful.
Time. That's it. Time is your single greatest superpower in investing. Because while all those short-term price swings are driven by emotion, long-term growth is driven by something much more solid: real-world progress and innovation. Time is what allows you to just ride out those emotional waves and let the underlying growth of businesses do its thing.
And time is the secret ingredient for the most powerful force in all of finance: compounding. It's that magical process where your earnings start to earn their own earnings. And as you can see here, it starts out really slow, kind of boring actually. But you give it a decade, then 2, then 3, and that growth becomes absolutely explosive. It's the ultimate reward for being patient.
So the main takeaway here is pretty clear. Stop trying to time the market. Stop trying to outsmart the collective emotion of millions of people. It's a game you're almost guaranteed to lose. The real goal is just to be consistent. By investing regularly, month in and month out, you end up buying at all points in that emotional cycle. You buy when people are greedy. You buy when people are scared. And you just let time and that incredible power of compounding do all the heavy lifting for you.
So what does that look like in practice? Well, here's a simple framework. First, think in terms of decades, not days. Second, don't put all your eggs in one basket. Diversify. Third, make investing a regular habit, like paying a bill. Fourth, let your gains keep working for you by reinvesting them. And finally, and this is maybe the most important one, do everything you can to keep your own emotions out of the driver's seat. Because when you boil it all down, success in a system that's driven by human feelings isn't really about what you know, it's about how you act, it's about your behavior. It means having the discipline to be patient when everyone else is panicking, and maybe a little cautious when everyone else is getting way too excited. Your biggest advantage isn't being the smartest person in the room, it's having the right temperament. And that really brings us to this powerful final idea. You don't need to predict the future. You don't need a crystal ball to know what's going to happen next week or next year. You just need to have faith that over the long run, human progress will continue. Your only job is to participate in that progress wisely, and then just be patient enough to let time work its magic.